Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters and I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on. I mentioned earlier, actually yesterday I should say, not a whole lot of economic data. The data starts ramping up Wednesday, Thursday, Friday, especially with the Jackson Hole Symposium. But today we did get something here in the United States in the form of Richmond Manufacturing Index. Came in better than expected at 14.11. Market was already moving a bit higher before that economic data point, but after that, it really ramped up the strength in the overall markets. Crude oil up a little bit today, up about 26 cents a quarter. Let's call it yesterday's Fibonacci level held quite nicely. As you can see, we came down, tested that. It gave almost all of yesterday's all of Friday's gains back yesterday. But this 50 Fibonacci level really holding strong yesterday and today. Really basically an inside day for crude oil as the broader equity markets are kind of the focus today. But that will kind of drive or help create buoyancy for crude oil, especially with a nice economic number like we saw in the Richmond Manufacturing Index. Gold futures coming off, basically suffering from the fact that, hey, flight to quality means we're going to the equities right now because the economic data points are coming out pretty good. Same thing with the bonds. We're going to see the bonds are also down on the day. It's not really taking a big, huge hit, but at the end of the day, we're talking about how bonds can't have a whole lot of room to the upside with the Fed coming out, especially ahead of the Jackson Hole Summit or Symposium. I don't really see bonds moving a whole lot. They're going to be basically saying they are right where they want to be at 1.25% and don't see themselves moving interest rates anytime soon. Will be interesting. Steve Leisman's usually out there and he has a real good in with the Fed governors. So, keep your ears open for Steve Leisman talking about what he's done with these, or talked to these different Fed governors. Now, when Bernanke and a couple of the other guys are in there, he used to take them fly fishing, so he got some good inside information in a sense. So pay attention to him when he's talking, especially after Jackson Hole. VIX, as you can see, just getting slammed down as the overall market's coming back up. I'm scrambling to try and take advantage of some of those last few stocks that are still above an IV percent of 50. Just trying to take advantage of any more volatility, contraction. Yesterday I basically took off everything. I didn't have very much at all in my IRA and very few stocks in my margin account, so I've kind of gone in there and added a few things to it, trying to leave a little bit of powder dry for a couple of the bigger last remaining earnings that we have going on. We got Lowe's coming out tomorrow in the morning, and then Alta coming out later on this week on Thursday in the PM. So gonna save some money on the table for that. But VIX, falling off quite a bit, and with all the earnings out of the way. It's time to really be trying to take advantage of some stocks that have high implied volatility, because that volatility should come out. Here we go. We have the Dow Jones Industrial Average up over 150 points. That's what I was talking about yesterday. It was going to be, give or take whether or not this was a continuation pattern or finding support here. Clearly, it's found support. It's actually confirmation to the upside. So me getting in early on that rebound didn't actually hurt. So on to the NASDAQ. As you can see, NASDAQ up over 1.25 up 70, or a percentage point and a quarter, I should say. It's over 70, almost 74 points right now. It is basically leading the way for the most part of all the equities, but the tech sector doing really well. Then we've got the E-mini S&Ps up 19 points on the day, up 0.75 of a percentage point, and clearly to the upside. This market's looking like it's going to move. And something to note, it looks like we've gotten the volume node and the time node right here at this 24.27. So it's finally moved away from down here where we were talking about. They got separated for a little while, where the volume node was down here, the time node was down here, the volume node was up here. Now both of those lockstep moved up here. That means price is being accepted up at these levels. That's a pretty big thing, especially if you are a market profile trader. Once you start seeing that price being accepted at these levels in the current time frame, that means that's a pretty big sign. So it's also going to act as a pretty big magnet. Anytime we start seeing any pullback, that's going to be kind of your target. Whereas before it's a little bit of a gray area. Now we've kind of got a solid number there now with the E-mini S&Ps. All right, on to the 30-minute chart of the E-mini S&Ps. This is what I was talking about. Basically, overnight we're a little bit lower, but coming into the day session, we just basically rocketed off and then got another leg higher on that Richmond Fed economic data points. Not really much to seen in weakness as any type of pullback. This was a low volume sell-off, so the retracement could be a little bit slower to the upside, because the market likes to fill in that volume in those low volume areas, which we would see in a big sell-off like that. Kind of similar to what we saw here on the upside, where the volume kind of trades sideways and kind of fills in that area. I could see this kind of trading sideways and then moving higher a little bit tomorrow. So don't think it's going to be as radical of a move to the upside as we saw to the downside. Anyway, on to the Apple trade. I did a couple of trades in here. Remember, in my IRA, I didn't have a whole lot. I do have some Apple short puts in there when I was taking advantage of some high implied volatility. So in my margin account, I'm short the September 150 puts already. So I decided to add something because we got a little bit of bump up in implied volatility in Apple as we had that sell-off. We're starting to see a little bit of a rebound today. Tech sector doing well, so I thought it would be an opportunity to add something with over an IV percent of 50 into my IRA. So I went in there and sold the September 157.5, 155 put spread. So sold 157.5 puts, bought the 155 puts to define that risk, and sold it for an 84-cent credit. So right in line with my rules and expectations. Had to get a little bit more aggressive with that Apple, because everybody was buying the calls. The calls actually have the skew to the Apple, but I didn't want to buy into that high implied volatility for a bullish trade in Apple, so I decided to go into the puts, but I did have to get a little bit closer with those 157.5 puts. So it's basically very close to where these lows, where was it? The lows of middle range of yesterday in a sense. So Apple threw some put spread in there, adding some long deltas, very long in deltas in my portfolio. I'm going to have to really be diligent in trying to find a few more short delta trades. So if you got anything, throw it out to me. I'm not too proud to look at some other trade ideas. Anyway, on to the triple Qs. With this one, you remember yesterday I did that I did a couple of extra trades in there with XLK, added a few more long deltas with XLK, very heavy in tech into my portfolio now. So I decided to look at some other opportunities. Also, this came in line with 50% of my max profit in there with the triple Qs. So I decided to pull that off and took the September 136 puts that I was short off for 43 cents, where I originally sold them for about 86 cents. So actually, I think it was even a little bit higher than that. So remember, when I sold those puts, covered those for 43 cents, right in line with 50% of my max profit. Actually, I had that in as a GTC. So took off the triple Qs there in my trading account. Not my IRA, but my trading account. PayPal, I decided to add a few trades in PayPal. It started moving higher. With PayPal, had high implied volatility. This market's really moved higher since I put it on. And volatility is starting to come out, so I haven't seen what the profit looks like on that yet. But PayPal, I added one trade to my IRA, one trade to my margin account. In my margin account, I sold the September 58 puts in there for 65 cents. And then in my IRA, I went into PayPal and sold the September 59 puts and bought the 58 puts, collected a credit of 29 cents. Right in line with my rules for that. Usually I say quarter to 30% the width of the spread. So it's a dollar wide, 29 cents, right in line with that. 33 cents is really the best case scenario for that, but just couldn't do it. And the market was rallying, and I actually had to start chasing that one a little bit. And wanted the trade more than I wanted the penny, clearly. All right, so PayPal in both my IRA and in my margin. XLK, with this trade in my IRA, I'm just working to try and add some long deltas in XLK by selling a put spread. It's gotten away from me. I'm basically at the bare minimum trying to sell that for a 25-cent credit. It's trading around 22 cents now. I'm not going to chase that one, so I might just let that one fall off. I don't even know if I really want that trade anymore, because if it comes back at this point, I don't know if it's going to be looking that great. But in my IRA, or sorry, my margin account with XLK, I was able to add some earlier on this morning and sold some September 56 puts in there for 42 cents. So add a little bit of XLK. So I took off that triple Qs, the market started going, and I was like, all right, I'm going to take more advantage of some high implied volatility in there. I'm also looking to try and cover some of my 55 puts, which would be very close to a 50% of max profit. So kind of working those out, working it for 15 cents, trading around 23 cents. So just have that in as a GTC at this point. All right, and then on to Facebook, another trade I'm trying to add as a call butterfly in there. Again, skewed to the call side in Apple and in Facebook. You know, I usually look to do the put butterfly because those premiums are a little bit more inflated and it allows you to get a little bit further out. But Facebook is getting the skew to the call side, so I'm going to try and take advantage of that skew. So I'm basically looking at buying the 162.5, 170, 177.5 call butterfly in there, and it's gotten away from me too. It's about a dime away now. So, but I'm just telling you about the ones that I'm trying to look at also, just in case. And then finally, the last one that I'm really looking at is EA Sports, and looking for a bullish shot in that. I saw something, Adobe looked like it was doing real good, and EA Sports has just completely gotten away from me this morning. As soon as I saw the tech sector really doing well, I was looking to add some EA Sports in there as well, thinking it would take advantage, and it's out even paced the broader tech sector, which would have been a nice trade if I could have gotten into that, but it's gotten away from me too. So that one, at least a nickel away. All right, that's all I got for you guys today, for today anyway. But Friday's webinar is going to be on the put diagonal, and this is going to be a great setup for earnings. When we have that earnings, we're going to be taking advantage of theta decay in this time zone here, and then taking advantage of expansion and volatility heading into the earnings for that one. So I'm going to show you how to set that up and why not to do the short call butterfly or short put butterfly in this instance, and why that is just not a trade that I would recommend for anybody to try to take advantage of anything. So I'm going to do both sides of this, where I'm going to talk about the long put butterfly or long put diagonal and why you should not implement a short put diagonal. All right, so go to protraderstrategies.com, sign up for that, and if you can't take that, take it easy.